What if you could capture the strongest performing stocks in the market without handpicking a single one? And what if the strategy wasn't based on predictions but on past winners that continue to show strength? And that's exactly what the Kotak Nifty 500 Momentum 50 Index Fund aims to do. But is momentum really as powerful as it sounds, or does it come with hidden risk investors tend to overlook? So let us break it down in an in-depth manner in this video and in simple terms. So hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now before analyzing this fund, let us first understand a few basic details about it. So as an NFO, it opens on 20th November 2025 and closes on 4th December 2025. So some of the key features of the fund are: this is an open-ended fund type which belongs to the category of equity flexi cap. It has Nifty 500 Momentum 50 TRI as its benchmark index, and there is no exit load as well as entry load. So the minimum investment amount required to invest in this fund is just 100 rupees, and the fund managers for this fund are Mr. Devender Singhal and Mr. Satish Dondapatti and Mr. Abhishek Bisan. So according to the riskometer, the risk involved in this fund is very high. So the primary investment objective of this fund is to provide returns to the investors before expenses, which closely correspond to the total returns of the securities as represented by the underlying index, which can be subjected to tracking error as this is an index fund. So now let's take a look at what the index this fund is representing about. So the Nifty 500 Momentum 50 Index Fund tracks the performance of 50 stocks which are selected based on normalized momentum score from the Nifty 500 index. So the score for each company is determined based on its 6-month and 12-month price return, which is adjusted for volatility. So this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds and ETFs and other structured products. So some of the sectors represented in the index range from financial services, healthcare to telecommunication, automobile and auto components. From the top 10 holdings of the index, you can see in the last there is Cholamandalam Investment and Finance Company Limited, which has a weightage of 4.01%, whereas Bajaj Finance Limited is in the first position with a weightage of 5.69%. So from the index returns on October 31st, 2025, you can see that as in the short run it may have some ups and downs, but in the long run it has performed very well comparatively. So now as we have a basic idea about the fund, let us move on to the analysis part of the video, where we are going to take a look at the pros and cons of investing in this fund. So let us start with the advantages, which are the pros. Number one, this fund follows a transparent formula-driven model that picks the top 50 high momentum stocks from the Nifty 500. So for investors who prefer a systematic approach over subjective stock picking, this rulebook based style can feel reassuring. And number two, momentum investing aims to ride stocks that are already performing well. So in bull phases, this can help portfolios latch onto strong trends yearly and stay with them longer. And number three, since the selection pool is the entire Nifty 500, the strategy can tap into strength across large, mid and even selected small caps. So the wider base can sometimes uncover opportunities that narrower indexes may miss. And number four, so instead of paying high fees for active momentum strategies, this fund provides an affordable index based route. For investors who believe in factor based investing, this structure can be cost efficient. So these are some of the advantages. However, there are some disadvantages, like one, first of all, momentum strategies typically reshuffle holdings frequently as trends shift. So this can lead to higher trading cost within the index and sudden changes in sector or stock exposure. And number two, what happens when markets flip direction quickly? Momentum stocks can be hit harder because the trend they rely on breaks abruptly. And number three, with just 50 stocks and a high factor tilt, it carries concentration risk. So investors looking for stable long-term core allocation might find it too narrow. And number four, momentum stocks often trade at higher valuations because they have already run up. Buying into such names through an index means you may enter at elevated prices without any room to judge value. So these are some drawbacks that we need to keep in our mind before deciding to invest in this fund. So what is the final verdict then? Is investing in the Kotak Nifty 500 Momentum 50 index fund worth it or not? So, does momentum really deliver powerful returns? Yes, historically it can, but only when the trend holds. Does it also come with phases of underperformance and high volatility? Absolutely. And with this being an NFO, is there really an advantage to entering right now, or can the same index be tracked even after it launches? That's for every investor to think about before deciding. This fund is simply another tool, not good or bad by itself. The real question is, does this strategy match your risk appetite, time horizon, and comfort with swingy market behavior? Our personal recommendation is, if suppose you're an ultra conservative investor who's not willing to invest in an actively managed funds, maybe this might be suitable for you, but still as an NFO, we recommend you to look for similar index funds that have a lower expense ratio and a lower tracking error with a track record of at least a few years. So actively managed funds do have potential to deliver higher returns than an index fund. So you need to consider that as well if you have a higher risk tolerance. And if you still have any doubts regarding how to invest, you can definitely consult with a professional like a financial planner who will look into the suitability of this fund's investment objective, risk profile, overlap ratio, allocation, and see whether that fits with your risk tolerance, your investment objective, your financial goals, and the time horizon for those goals as well, and will strategically help guide you.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.